USDA Business and Industry B&I loans combined with PACE financing, a powerful capital solution for middle market commercial projects. And for many commercial real estate investors and business owners, finding affordable financing for projects between 5 million and 30 million can be challenging, especially when it's in rural and secondary markets. And traditional banks often require larger equity injections or struggle to finance specialized properties. Fortunately, USDA Business and Industry B&I loan guarantees will combined with PACE financing, property assessed clean energy financing, creates one of the most attractive capital stacks available for eligible commercial projects. And through CommLoan's nationwide lender marketplace, borrowers can access financing solutions that dramatically reduce the equity requirements while also improving long-term cash flow. So what is USDA's Business and Industry B&I loan? And the USDA Business and Industry Loan Guarantee Program encourages economic development in rural America by reducing lender risk through a federal guarantee, provides liquidity. And the program will support manufacturing facilities and industrial properties and hotels and self-storage and healthcare facilities and distribution centers, particularly food processing and agricultural businesses, but also mixed-use commercial projects and owner-occupied commercial real estate. So instead of lending directly, the USDA will guarantee a significant portion of the loan made by the approved lender. And that guarantee often results in higher leverage for our sponsors, with longer amortization and competitive interest rates, but also larger loan proceeds with flexible underwriting. So what is PACE financing? Well, PACE, Property Assessed Clean Energy Financing, provides long-term funding for energy efficient and resiliency improvements. So eligible improvements that are going to qualify would be, say, an HVAC system or solar or roof replacements or insulation or windows or electrical upgrades or water conservation or lighting improvements or building envelope improvements, and also emergency power backup systems. Now, unlike traditional financing, PACE funding is repaid through a property tax assessment over a long term. So why would you want to stack USDA and PACE financing together? Well, the real advantage comes when these financing sources are combined. And a USDA loan finances the core project, while PACE finances the qualifying improvements, which helps you to get a larger loan. And the benefits there include also less equity from your pocket, and PACE financing replaces a portion of what the borrower would need to bring as equity into the project. So instead of injecting additional cash, eligible energy efficient improvements could be financed separately. Larger loan amounts. So projects between 5 million and 30 million will become easier to finance. And many middle market borrowers struggle because conventional banks will cap leverage and you need a huge equity injection. And the USDA guarantees, plus the PACE financing, really solve this challenge, is my point. And that helps through improved cash flow. And PACE financing typically offers a very long amortization with lower annual payments and a fixed repayment structure. And that preserves operating cash flow. Increased project feasibility. And developers frequently eliminate energy improvements because of the cost in the overall budget. Whereas PACE allows these improvements to remain in the project while also preserving equity that needs to be injected. So let's talk about some ideal projects. This structure works exceptionally well for manufacturing plants and cold storage facilities and industrial buildings and hotels and assisted living facilities and medical buildings and food processing buildings and logistics centers and commercial redevelopment, but also rural mixed-use projects. And rural doesn't necessarily mean remote, is something to think. And one of the biggest misconceptions about USDA financing is that it only applies to farms. And many growing suburban communities will qualify. And large portions of Texas outside the major city centers are in USDA eligible areas. So it's worth the thought process and a conversation. And many industrial corridors and manufacturing districts and developing commercial areas will qualify because they're not in the central business district. So, why work with CommLoan? Well, finding the right lender is often the biggest obstacle. And rather than approaching one local bank, CommLoan provides access to over 700 commercial lending sources nationwide. And some of the benefits include USDA lending and PACE financing relationships. We can help you optimize your capital stack. And we compare through competitive lender matching, which delivers faster execution and better financing options for you. So instead of forcing your project into one bank's lending box, CommLoan will help identify lenders specifically interested in your project. So, final thoughts. USDA Business and Industry loans combined with PACE financing create an outstanding solution for middle market commercial projects between $5 and $30 million. And borrowers will benefit from reduced equity requirements and longer repayment terms and lower financing costs, but also improve project cash flow and enhance lender flexibility because of the USDA guarantee. And with PACE, you get financing for the energy efficient improvements. So if you're developing or acquiring or refinancing a commercial property in a rural market, this financing strategy could substantially improve your project's economics. And please contact myself, Bill Rapp, CCIM, with the CommLoan Empower program to determine whether your project qualifies, and also to explore financing options through our nationwide commercial lending marketplace. And that's it for the day. Please visit my website, billrapp.commloan.com. Thank you for watching. You have a good day.